is Akshat Shah, and I'm a student from grade 10 studying in Mumbai. And over the past few years, I've gained an interest in finance to the extent to which I might want to get into finance and perhaps explore it as a possible future career path. But I realized that I need to learn more about finance to do so. That's why I decided to speak to close friends and family who have big positions in the finance industry and could guide me as towards the best possible option for me. And during my conversations with my friends and family, I realized that there are so many students just like me in high school who also want to get into finance and possibly explore it in the future but don't know where to get started. That's why that sparked an idea in me to start a podcast where I can share my learning with you guys to help you all learn more about what a finance career might look like and how you can best get started in the industry from advice from industry experts and industry leaders who've spent years in the finance industry and have enough knowledge. Today's podcast, I'm going to be interviewing somebody who has worked for over 20 years in the field of asset management, Ajay Vora. His work at Nuvama Asset Management helps bring in massive returns for the company through his undeniable skills through investing in key companies and startups in order to bring in the best value for his investors. He delves into a very important aspect of finance that is intriguing to most people today: asset management and equities. His work as head of equities at Nuvama Asset Management really focuses on ensuring that he can invest in key Indian companies in the equities market with India's growing economy, and explains the importance of looking at different factors such as the growth, past historical trends, and the various government regulations that impact the economy today, and his role as a head of equities at Nuvama Asset Management. He gives important and crucial advice for individuals curious to learn more about what head of equities as a role is, and gives advice to students who might want to do this as a possible career path in finance. It's a popular degree and it's on the rise. And his advice is undeniably some of the most valuable information students can gain in order to pursue this as a potential career. So sit back and enjoy this episode. Hi, Uncle. Thank you for being on the podcast over here. So, I think just to start off, just want to get some introductions, on what you do, what is your role and responsibility, and, just in general, what is Nuvama Asset Management?
Sure. So, thanks Akshat for having me. Firstly, I'll just give you a brief about my education, and then maybe, over the last 20 years, what exactly I've done.
Sure.
So, I've done MBA in finance from MET.
Right.
Post that, basically, I joined Morgan Stanley.
Right.
I was with Morgan Stanley for 2 years. Somehow, I thought that, my interest area was more on the fund management side,
Right.
rather than doing sell side equity research.
Right.
And I'll just step back. Why equity research and why capital markets?
Right.
Because from a very early age, I was very keen on this whole stock market. The mechanism and the framework where if you invest in a particular company and stay invested for a while, you can actually end up making decent money.
Right.
So that was the whole, I would say, the kick which got me into this whole stock market and fund management and equity research and all. So as I said that, post my MBA, I joined Morgan Stanley, which was on the sell side. I was there for 2 years. But somewhere I thought that, the whole kick was more on the buy side, where you are given the responsibility to manage money and deliver returns, right? So then I joined Asset Management, which was a buy side PMS firm.
Right.
I started as an analyst, and gradually I was there for around 6 years.
Right.
I moved on to become head of research over there.
Right.
So I was managing a team of around 6 analysts, and I was part of the core investment team,
Right.
where we used to manage $1 billion at that point of time.
Oh wow. Okay.
So this journey was for 6 years, I think, which really helped me build the foundation for understanding how the stock market operates.
Right.
How do you look at companies?
Right.
How do you understand which industries are lucrative?
Yeah.
Gauge the cycles of different industries.
Right.
So I think that was a good strong foundation for me for the 6 years. After that, this opportunity came up with Reliance Industries,
Right.
which is Mr. Mukesh Ambani led
Right.
group. So they have a very large treasury.
Right.
And they primarily invest into fixed income instruments, which is mainly the government securities and all.
Right.
But somewhere they thought that they want to diversify and start building an equity portfolio as well.
Right.
So at that point of time, I was approached to set up the whole team,
Right.
an equity team.
Right.
So we basically did few hirings, and we started with a close to $100 million odd,
Right.
because they were also testing in terms of how they want to scale it up.
Yeah.
So we started with $100 million.
Yeah.
Fortunately, this experience also turned out pretty well.
Right.
Where over a period of 6 years, we scaled the equity portfolio from $100 million again to $1 billion.
Wow. Okay.
So obviously that included fresh money as well
Right.
as internal profits.
Yeah.
But that was a very, I would say, good experience, because we, using the Reliance brand itself,
Right.
we managed to build very strong relationships with lot many corporates,
Right.
CEOs, CFOs. So
Mm.
that helped me understand those companies and those businesses very much in detail,
Right.
I would say.
Right.
So I think that was a good, 6 years with Nuvama Asset Management, 6 years with
Right.
the Reliance industry. But somewhere, me and my team believed that whatever we were delivering was not very much known to the public at large.
Right.
So, you have the mutual funds, you have the PMS.
Yeah.
They would not know us as a money manager.
Right.
And that is the time when this Nuvama opportunity came in, where they were thinking of, doing something very different, which is we call in our, in a parlance, the long short strategy.
Right.
So that is what we started 5 years back on Nuvama platform, and I got my entire team
Okay.
to Nuvama
Yeah.
from Reliance. So again, there we started from scratch. We had no money at all. But basically, Nuvama is a wealth platform, so they have lot many HNIs and family
Yeah.
offices as their clients.
Yeah.
So broadly, we started raising money from them, and that is how it all started. So year
Okay.
1 was slow, year 2 was a little better.
Yeah.
It just kept getting better and better.
Right.
So now we are managing close to 6,000 crores,
Wow. Okay.
fully into Indian listed equities,
Right.
and we have a team of around 7-8 members. So I am the CIO of this whole asset management equity.
Okay.
Yes.
Okay. Yeah. And so, just to track back a little bit, just understand in your early career, where did you go to college, and you can just expand on,
Yeah.
what is the university, and, how did you get there?
So unfortunately, during our times, we were not as lucky as you guys to get that kind of counseling.
Yeah.
So I got into BCom.
Right.
I've done my bachelor in commerce from Narsi Munji College. But somehow at that point of time, I had my family business also.
Right.
So I had no idea about how to progress in terms of this whole education. So I
Right.
joined my family business also for a couple of years.
Okay.
And then suddenly, I had a very close friend who said that ideally you should be doing MBA.
Right.
So then I appeared for MBA exams and all.
Okay.
Somehow got decent marks.
Right.
And that is how this whole journey started. But when I joined MBA, I was very clear that I want to get into equity markets,
Right.
because as I said that actually became like a passion for me in
Right.
terms of understanding how it works.
Right. Right.
So that I would say clarity was there.
Makes sense.
Yeah.
And so, just going back to Nuvama then, so you mentioned about, it being essentially, you're working on the asset management
Yeah.
aspect of Nuvama. You didn't explain, what asset management is, and,
Sure.
what are the 3 categories or 4 categories that fall under that.
Yeah, sure. So how it works is that in any industry,
Yeah.
you will have a manufacturer
Right.
and you will have a distributor.
Okay.
And then you will have a customer.
Yeah.
This is the pattern of any industry,
Yeah.
right? So within this whole money management also, you have a distributor.
Yeah.
And what is a distributor? Distributor is someone who knows all the clients,
Right.
who has surplus money to invest,
Right.
But they cannot deliver returns.
Right.
They know people who can deliver returns.
Yeah.
And who are those people? They are the manufacturers,
Hmm.
which is the asset management. So mutual fund industry is the manufacturer. Wealth businesses are the distributors, right? So wealth people get money for asset managers.
Right.
Now whether be it a mutual fund or a PMS or an alternative, they are all part of the same money management ecosystem.
Okay.
But the clients are owned by the distributors,
Yeah.
who are the wealth, and in now modern language we call them private bankers.
Right.
So private banker would be knowing, say, top 100 families. Those 100 families will trust the private banker for his advice, that private banker will be in touch with 50 different asset managers.
Right.
So depending on who is delivering good numbers in terms of returns, the private banker will recommend those products or those funds to those families.
Okay.
Right? So this is how it works.
Yeah.
Now within asset management, you have different platforms. You have mutual fund, you have PMS, you have alternatives. Ours is a completely alternative platform.
Okay.
And within asset management, you have different asset classes.
Okay.
Right? So there is not only equity as an asset class.
Right.
You have fixed income as an asset class.
Yeah.
You have real estate as an asset class,
Right.
and you have equity as an asset class.
Okay.
Right? And then there is gold and all those
Yeah.
things. But that is not institutionalized to that extent.
Okay.
The fixed income market, real estate, and equity is more sophisticated and institutionalized.
Okay.
So we as an asset manager, we'll come up with different sophisticated products,
Okay.
which will have some sort of, I would say, specific features, or I would say specific characteristics, based on which we assure. I wouldn't use the word assure, but we say that this is what we can deliver.
Right.
And if the wealth manager gets impressed with our pitch and our thought process,
Right.
they will get their family's money to us.
Okay.
Right?
Okay.
So that is how we raise money.
Okay.
So the more and better we deliver, there are high chances that more and more private bankers will get their clients' money to us.
Right.
So as I said, that when we started with zero, and we started with only one product.
Wow.
Right?
Okay.
Now today, after 5 years, that zero is now 6,000 crores,
Yeah.
and we are running closer to 5 different strategies.
Okay.
So one will be an small and mid cap strategy. One will be a long short strategy. One will be a flexi cap strategy.
Right.
One will be a structured product category. Right. So similarly, we have different products.
Okay.
All put together, this is a 6,000 crore equity within the asset management.
Okay.
Now we have another vertical, as you said, that within Nuvama, what do we have?
Yeah.
Within the asset management, the other vertical is private equity.
Okay.
So we raise money for the private equity division through the same clients.
Okay.
We say that we will be investing into unlisted companies. Those unlisted companies at some point of time will go public. When we say go public, means they will come up for IPO, right? So they will hit the markets. And that is the time when those investors who have invested in an early stage, they will get an exit.
Right.
So that is how the private equity fund operates.
Okay.
And then lastly, we have a real estate vertical also.
Okay.
So where we buy into either under construction or ready commercial spaces.
Okay.
We do only commercial real estate.
Okay.
We don't do residential.
Okay.
So these are the 3 different verticals.
Okay.
3 verticals put together, our asset management total AUM is around 13,000 crores.
Okay. Wow.
So this is entirely raised by our wealth managers from the local families, meaning Indian families and Indian HNIs.
Okay. Okay. And then to sort of expand, you mentioned that you run an alternative fund, right?
Yeah.
Can you explain the difference between what is an alternative fund and a typical mutual fund?
Yeah. So that's a good question, Akshat. So people need to understand this concept. See, mutual fund is for very retail public.
Okay.
There are advantages and there are disadvantages.
Right.
So the advantages, I'll tell you, the ticket size can be as low as 500 rupees.
Okay.
So someone who doesn't have that high income or disposable surplus to invest,
Right.
they can continue to invest 500, 1,000, 2,000 rupees into the mutual fund space.
Okay.
Number one.
Yeah.
Number two, the taxation is a big advantage.
Right.
There, the taxation is long term, short term capital gain tax in mutual fund.
Okay.
But on the other hand, the disadvantage is you don't have access to the fund manager.
Okay.
Right. So if suppose you are investing in a Nippon large cap fund, which is managed by Sailesh Bhan.
Right.
Now, because you are an investor in the fund, you cannot say that I want to talk to the fund manager. Right. So if you want to know a little bit more about his thought process, what does he think about the market, you will not have access to that. Right. But you can continuously invest in that fund.
Right.
Alternatives are basically customized products for sophisticated investors.
Okay.
Sophisticated meaning for people who really understand the market and want certain products which suit their needs.
Okay.
Mutual fund doesn't give you products customized to you.
Right.
There is a platter. You have to choose whether you want to do this. But if you are a large investor and go to an alternative saying that this is what my needs are, you can get a customized product for yourself.
Okay.
On the other hand, there is a minimum ticket size of 1 crore.
Okay.
So below 1 crore, you cannot get into alternatives.
Okay.
Right. So these are few pros and cons, but both are very different.
Okay.
Alternatives industry now has become pretty large.
Hmm.
It is a 10 lakh crore industry.
Okay. Wow.
There are three types of alternatives: category 1, category 2, and category 3. Where we are positioned is the category 3, which is more or less into all the listed equities. There is a category 2, which is more focused on private equity. And category 1 is very different, which is all infrastructure assets.
Okay.
So all the three categories put together, the alternative industry is right now 10 lakh crores.
Right.
If you look at the mutual fund industry, mutual fund industry right now is 70 lakh crores.
Okay.
Out of that, equity is 40 lakh crores.
Okay.
Right? So that is how the mutual fund industry.
Right.
And apart from that, you have a PMS, which is completely different.
Okay.
Right? There the minimum ticket size is 50 lakh rupees.
Okay.
Again, there you get customized portfolios focused on small and mid cap. That industry also is right now around 9-10 lakh crores.
Okay.
So this is the whole gambit of asset management in India. All put together, you are somewhere close to 100 lakh crores,
Okay.
which is a very big number, and this has done really well over last 5 years, I would say.
Okay. Okay. And so, because you've spent so much time investing in Indian markets and Indian equities primarily, what do you see as in terms of, the future for most young high school students today to, get into this equity investing, and, where do you see India's potential as a growth in that for people to potentially pursue a fund or start your own fund in India itself?
Yeah. So no, this is a very good question. Again, people should have a clarity about all this at a very early stage.
Right.
So I keep on telling this to my colleagues and wherever I go to the investors. What actually fascinates me about this whole investing business is that, see, at the end of the day, we all want to do good in life, right?
Right.
The idea is that if you start a business, right, you will be focused to that business and you will have to run that business for a longer period of time because that is what you want to grow, right? There's no harm in that. But the whole investing business gives you a very big opportunity where you can partner with several businesses which are likely to grow.
Okay.
So I'm saying that if you at some point of time find a NBFC which can do really well over 3-4 years,
Right.
so you put some money into that NBFC.
Okay.
You get shares, you can buy shares and participate in the growth of that NBFC.
Right.
So if you build a portfolio, which is diversified enough to participate into growth of several, or I would say few industries, companies and entrepreneurs whom you want to back for 2 to 3 years, you can have a decent compounding on that portfolio.
Right.
So I would say that, say suppose if you start with a 10 lakh rupee portfolio, and if the portfolio compounds at 25%,
Right.
in basically 3 years, you can double your capital.
Right.
So you can get the same opportunity by running your own business as well.
Right.
But running a business comes with its own, pros and cons.
Right.
This also involves a lot of risk. Investing also involves, because if you go wrong, you can end up losing your capital as well.
Correct.
But that is why it forces or pushes you to do that much more fundamental research,
Okay.
so that in case even if you don't go right, you will not end up losing that kind of money.
Okay.
So there is a lot of risk
Right.
also involved.
Right.
I should say that.
Yeah. And to expand on that, when you said fundamental research, can you just, sort of, just for the audience to understand what
Yeah.
fundamental research in equity is and,
Yeah.
how one should go about that as well?
So I think that is a bit more rigorous, I would say.
Right.
When you start, you may not realize many variable factors actually come into play
Right.
in this whole investing business, right? It is not only you understand the company or you understand the industry and then you put your money.
Right.
You have to understand the whole macroeconomics, how the entire geopolitical factors can impact, how various other industries can play a role in the
Right.
demand supply
Right.
dynamics. So I would say that it is a very rigorous process, but as you get into it, within few years you will start getting a hang of it.
Right.
But I think for kids of your age and into this whole accounts and economics, while studying you may not realize the relevance of all those things,
Right.
but at some point of time you will get a sense how important those subjects are.
Okay.
Because I would say, I keep joking that in this world everything is related to one thing, which is economics.
Right.
Right? So that is the whole underlying, I would say, the foundation of investing. And then you have this whole understanding of profit and loss statement, balance sheet statement, and cash flow statement, right? So every company comes up with an annual report, right? So me and my team actually goes through 220 or 230 annual reports every year.
Right.
What do we do about those annual reports? You have to understand how the P&L is, shaping up for those companies historically and going forward. You have to understand several things within balance sheet. You have the as basic as the leverage ratios, the current asset ratio. Many things goes into the whole balance sheet analysis as well. And then finally, what matters is also the cash flow statement, right? Because at the end of the day, people keep saying that revenue is also important, profitability is also important, but what is most important is the cash flow, free cash flow.
Right.
So as you move into this whole fundamental research, you will realize that analyzing all these three statements gives you a head start into fundamental research.
Okay.
Yeah.
Makes sense. And since to just sort of go back to you explain that you're running an AIF. So I think even me, for example, and a lot of people might get confused what an AIF and a hedge fund is. Can you just sort of explain the distinction or the difference between those two?
So AIF is nothing but a platform.
Right.
So just like you have a mutual fund platform, you have a PMS platform. What is a platform? It is a platform to accept money.
Okay.
Similarly, AIF, what is AIF? Alternative Investment Fund is the AIF, right?
Yeah.
So again, that is a platform. So each and every platform will have some features and some restrictions. So as I said that AIF minimum ticket size is 1 crore.
Okay.
PMS minimum ticket size is 50 lakhs. Mutual fund minimum ticket size is 500 rupees. So similarly, you will have many other features.
Okay.
But the point is that AIF gives you a lot of flexibility.
Okay.
Like in PMS, you cannot trade in derivatives. Mutual fund, you cannot trade in derivatives on a naked basis, right?
Okay.
If you have a position, you can use derivatives to hedge, but you cannot trade into derivatives as a naked position.
Okay.
But alternatives gives you that kind of flexibility to get into derivatives both on the long side and short side.
Right.
So therefore, this whole thing of hedge fund, which is very popular globally, that has also done pretty well in India. Hedge funds are more on the AIF platform because hedge fund looks to go long, long meaning you buy stocks, and go short. Go short meaning if you think that a particular stock is likely to go down, you can make money in that scenario also by first selling the stock, and when it goes down, then you buy the stock. So you end up making money, right? So those are the hedge fund category which are on the AIF platform.
Okay.
So we run one of the strategy which is a flagship strategy, which is a hedge fund strategy on the AIF platform.
Right. And so also, one thing I'm curious about is how does the, if you are the fund manager of an AIF, how does your profit compare to, what you're going to earn personally? Because, sometimes is there a commission or is there some sort of, specific target that you have to reach before which you can get a bonus? How does that work?
Yeah. So see, these are the commercials part. So I'll explain a little bit in detail so that you can understand. Because we cannot raise money on our own directly from the clients, we would not know the clients, and that is where the distributor comes into play. So if suppose you are a distributor and you know some wealthy family, you get that family to us, and we agree that a family also agrees to invest a surplus whatever number with us. We charge a management fee. Now hypothetically say that management fee is 2%, right? Because you have got your family to us, we will have to share a part of my management fee with you. Right? So say suppose I share 50% with you. So my balance profit is 1%. Now for example, I am managing a 6,000 crore fund, for example, right? Now on that 6,000 crore, I'll end up making 2%, but I'll have to share 1% with you. So my net earnings is 1%, right? So that translates to 60 crores as a firm that goes to Nuvama. Now say suppose if I have delivered better returns versus the market, so my team has done reasonably well. So we will have some sort of framework where the team is also incentivized over and above the salary, because we are on salary. I don't own Nuvama, I work for Nuvama. So therefore, if I end up delivering better returns, there is a framework where the team will be incentivized out of whatever pool or profits that the organization makes.
Okay.
So that will be in addition to the normal salary and the bonuses. But this is very, I would say, different for different firms. It keeps on varying. But this is broadly how the commercials actually work.
Okay. Yeah. And so, for somebody, if they want to make a high profit or if they want to do really well in sort of the investment field, for example, when running an AIF, what do you think are the important aspects or qualities that a person should have to be able to, successfully invest and generate the kind of returns that you have?
So, see, my limited experience tell me that you cannot make big money in a short span of time.
Right.
You can make fast money, but you cannot make big money.
Right.
To make big money, you should have two things by your side.
Right.
One is you should have capital, and second is you should have patience. In today's world, data, intelligence, all these things have become commodity.
Right.
You can get n number of data which everyone analyzes, and you can make your own decisions. So there is no rocket science to that. But it is the investing is more to do with your temperament, right? So you need to be patient. Obviously, you need to work hard towards it, but you need to be patient. And secondly, you should have capital.
Okay.
If you don't have capital and if you start investing on borrowed capital, that can actually create a lot of problems. So that is what is called as leverage, right? So if you have say 100 rupees to invest, and at the end of the day you are not happy with 100 rupees as a capital, so you borrow 400 and you make a portfolio of 500.
Correct.
Now suddenly that 500 portfolio goes down by 20%, which is 100 rupees gone.
Yeah.
So you will end up losing your entire 100 rupees as a capital.
Correct.
So many times, these days, because we get a lot of data, people are more interested into derivative options and all, because they look at the profits which they can make in 1 month, 2 months, 3 months. But there is a lot of leverage attached to that. Now, investing is a journey, right? So you need to enjoy that journey rather than get killed in the journey and make it a bad experience for yourself.
Yeah.
To make wealth, you have to stay invested, and therefore I said that you need to have two things by your side. One is you should be patient, and second, obviously, you need capital, which I'm sure all you kids have rich fathers, so you have enough capital to invest.
Yeah. And also, then expanding on that, for somebody if they are looking for a position at Nuvama Asset Management, for example, what do you think are sort of the qualifications that they should have? Perhaps if an MBA is necessary or going to a good college, do you think that makes an impact if you're trying to have somebody?
Yeah, so preferably an MBA works, but these days, people, I would say, learn on the job also pretty well.
Okay.
So I think I've seen a lot of chartered accountants also into our investing field, because chartered accountant is more to do with understanding balance sheet, P&L, cash flow.
Right.
So there is a mix of chartered accountant as well as MBA, but I would say that largely it is the MBA academic background which is preferred for this kind of field.
Okay. Hi, thank you for watching, and I hope you guys enjoyed it. I will be bringing on more guests and industry leaders who can give their insight and share their experiences on the industry. Please let me know if there is a specific industry you'd like me to go over as well. And please like, share and subscribe, and share it especially with those students just like yourself who can also gain insight out of this, and we can help everyone achieve learn more.